How to build wealth with good credit. A common misconception people have about building wealth is that they need lots of money, but actually they need good credit. It's their credit score that will dictate whether they'll be able to get a loan and/or a mortgage. A lot of people don't know this, but it's easier to build wealth than you think. This might not sound right to some people, but you can actually build wealth with a little bit of money. In order to raise your credit score, you need to maintain a good credit history by paying off your debts, keeping your balances low, and avoiding missing payments or going into debt. We all want to live the good life, and with good credit, you can do just that. In this video, I will teach you how to build wealth with good credit and what the benefits of good credit are. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released. A credit score is a three-digit number that ranges from 300 to 850. It is a numerical representation of your creditworthiness as determined by the three major credit reporting agencies, Experian, Equifax, and TransUnion. The concept of good credit is largely misunderstood. There are many misconceptions about what good credit actually means and how it affects one's ability to purchase necessary items. For instance, while having a high credit score can certainly help consumers in their financial endeavors, it does not protect them from bankruptcy. On the other hand, while having a low credit score might be indicative of poor money management skills, it doesn't mean that they're incapable of paying off their debts in the future. It is important to have a good credit score. It can make the process of borrowing money easier and more affordable for you. But how do you build wealth with good credit? First, you have to understand why it is important to have a high credit score. Your credit score will affect the rates on loans you take, the deposit required on renting an apartment or buying a home, and your interest premiums on your credit card balance. If you are looking for ways to save money in any of these areas, then it is best if you have a good credit score. Second, understand that there are many different types of assets that people often overlook when they are determining their level of wealth. Assets like retirement funds, life insurance policies, and annuities all count towards your financial status. Another way to build wealth is by investing. You can invest in stocks, bonds, or other securities, or you can invest in real estate. The more money you have earning interest, the more you can gain from it over time and grow your net worth. How does your credit score affect your finances? To get a good idea of your credit score, you can take steps to get your free annual credit report from the three major credit bureaus, TransUnion, Experian, and Equifax. The idea of having what are essentially three different credit scores is another factor that can be complicated and overwhelming. Your credit score is a number which represents the level of trust between an individual and their lender. The higher the number, the more likely it is for you to repay loans back on time and in full. The average credit score is just over 700. Some lenders are willing to offer loans to borrowers with a lower credit score, but you'll have to pay higher interest rates. So if you have a good or excellent credit score, lenders are more likely to give you loans at lower interest rates. Is your credit score keeping you from building wealth? Credit scores are crucial for several aspects of your life. A lot of people don't know this, but your credit score is the key to securing the best rates on mortgages, car loans, and credit cards. You may not be able to get insurance or even a job without a credit score. Your credit score can even affect your ability to get an apartment or find a job. That's why it's so important that you check or monitor your own credit report regularly. How important is your credit score? Is it enough to make you financially poor or rich? Your credit score is used to determine what your level of risk is and how likely you are to pay your debts. There are various ways to calculate a credit score, but the most common one is based on 5 factors: payment history, 35%, amounts owed, 30%, length of credit history, 15%, new credit, 10%, and type of credit used, 10%. What matters most to lenders are on-time payments on all debts and high credit limits. It's about managing your credit wisely and not spending more than you can afford to repay. A good score will help you get a loan at a lower interest rate than someone who has a poor rating. This gives consumers access to lower-cost loans, which in turn helps them build wealth over time by saving on average $5,000 per year on interest rates alone. The 3 fundamentals of building wealth with great credit. There are 3 fundamentals of building wealth with great credit. Establish a good credit score. In order to have a solid financial future, it's vital to have a strong credit score. A good credit score provides access to lower interest rates and better terms on loans. It also means more borrowing power for important purchases such as a car or house. When you have a poor credit score, it can hurt your chances of getting a new job or even renting an apartment. 2. Maintain a low debt-to-income ratio. The debt-to-income ratio is used to measure a person's ability to pay off their debt. It is calculated by dividing the monthly income by the monthly debt obligations. In order to determine how much debt a person can afford, lenders will often use a conservative 30% threshold. The 30% rule is a guideline in determining how much debt, such as credit card debt, mortgage, and car payments, a person is able to handle. This rule states that an individual can usually afford up to 30% of their monthly income per one type of debt. Having a low debt-to-income ratio means that you are spending less than you earn. This is an important point for any individual or family because if you are not able to spend less than what you earn, then you will find yourself living paycheck to paycheck and struggling with your finances. 3. Maintain a high savings rate. Proper savings can keep your finances in order and help you achieve your future goals. You may not know how much you should be saving, so we recommend saving 10-20% of each paycheck. Saving money is a great way to get ahead and stay ahead. With a high savings rate, you can build up your nest egg and live more comfortably in the future. Protecting your credit score. As a consumer, you have the responsibility to protect your credit score. This can be accomplished by paying off any outstanding balances on your credit cards each month, making timely payments on all loans and other debts, reviewing your credit report annually, and not opening new lines of credit unless necessary. Your credit score is used by many creditors when making lending decisions, so it's important that you protect it at all costs. Here are some tips on how to keep your score in good shape. Pay bills on time. Keep balances low on revolving accounts, especially credit cards and line of credits. Avoid opening too many new lines of credit. Keep recent credit inquiries low. What is a good credit score and how can you improve yours? A good credit score ranges from 700 to 850 on the third-party scoring scale. A good credit score means that you have a higher chance of being approved for loans and other forms of credit at lower interest rates. It also means that you will have to pay less in interest on your loans, because lenders will see you as a more desirable borrower. The first step to improving your credit score is to make sure that you understand what it is and how it works. For example, many people think that they have a bad credit score because they have never checked their report or score before. In reality, they don't have anything but a report because there are no scores until you apply for something, which doesn't count as bad by any means. Improving your credit score can be done with some simple steps. First, you will need to know what your credit score is and what it means. You can either ask your lender, look in the mail for your most recent copy of your credit report, or request one online at annualcreditreport.com. If you are not sure whether certain accounts are showing up on your report, you should contact the credit provider and ask them to remove any errors that they may be aware of. It may also help to pay off any balances that are not in collections. How does your home mortgage affect your credit? Your mortgage is a huge financial obligation that can impact your credit. Before you take out a home mortgage, it's important to know how this will affect your credit. Home mortgage usually lasts for a period of up to 30 years, and the monthly payment is typically made in increments of 1/12 of the original loan amount each month. What happens if you miss a payment? The first thing that will happen is that you'll receive a notice from your lender notifying you that they've received less than the monthly payment amount. The second thing that might happen is being sent to collections, which could have an adverse effect on your credit score. Lenders are more likely to approve your loan application if you have a high credit score. If your credit is low, they will charge you higher interest rates or find it difficult to approve your application. How to build wealth with investments. Investing is essential when it comes to building wealth. But with so many different options out there, it can be hard to know where to start. As for what you should invest in, that's a decision that only you'll be able to make based on your personal financial situation. There are a number of factors that go into investment decisions, including your age and the time frame you'll need the money in. For retirement investments, for example, the time frame might be longer than if you are investing for the short term. You should also consider how much risk you are willing to take on for any given investment opportunity. There are many ways to invest. However, most of them are complex and require a lot of effort. That is why it is important to choose the right type of investment that suits your needs. You might be wondering where you should start when it comes to investing. The following are some types of investments that can help you build wealth. Mutual funds. This investment is composed of stocks or securities, which shares in the profits and losses. Stocks. Buying individual stocks can be risky because they do not have guarantees, but they usually offer higher returns than mutual funds. Bonds. Bonds offer relatively low rates of return, but they are safe investments that provide high security for your money. Riskier investments. With the world economy in a state of turmoil, investors are looking for ways to make a return on their investments. A riskier investment is one that has the potential for higher return but also has an increased chance of loss. How to build your credit score with no debt. Some people have excellent credit, but have never used it because they have never had any debt. They are known as credit invisible because there are no records of them using their credit. Others have no debt but carry low or no credit score due to limited or non-existent history with lenders. You can build a credit score with no debt. Here are the steps to follow. 1. Obtain your credit report from one of the 3 major credit bureaus, Equifax, Experian, or TransUnion. Your credit report will list all of your debts and other information about your financial history. You can get one free copy of your report during any 12-month period. 2. Prioritize paying off debts with the highest interest rate first. For instance, if you have 2 loans with equal balances, but one has a higher interest rate than the other, pay off the higher interest loan first because you'll save more money in interest payments over time. 3. Consider consolidating debt by taking out a personal loan for less than what is owed on existing loans. How much does bad debt hurt your credit score, and what can you do about it? Bad debt can hurt your credit score, but only if the debts are not paid. If you pay your bills on time, you will see an improvement in your credit score. If you have unpaid debts, then they will actually hurt your credit score and can even lead to bankruptcy. The best way to deal with it is to try and negotiate a settlement with the lender or start to pay them off as soon as possible. Bad debt is a problem for many people. But when it comes to your credit score, this bad debt can be a much bigger problem because it will stay on your report for years. There are 2 main types of bad debt: charged off and written off. These terms mean that the creditor has stopped trying to collect the debt from you and has decided to just write off the balance as a loss instead. The one thing that you need to know about these debts is that they stay on your credit report for 7 years from when they were first reported or charged off, whichever was most recent. In order to get out of this dark cycle of collecting bad debts, people often turn to taking out high-interest loans, which have been known to put them in even more financial stress than before. Secured loans and the benefits of building wealth with good credit. Secured loans are a type of loan that requires collateral in order to guarantee repayment. However, it is not necessary to have a good credit score in order to get a secured loan. A home equity line of credit, HELOC, is a good example of this type of loan. Secured loans offer many benefits for those who use them responsibly. They can be a way to build a good credit score, establish the foundation for future borrowing, and even provide peace of mind for your finances. A secured loan is not the same as an unsecured loan or line of credit. It requires collateral, such as stocks, bonds, vehicles, or real estate, in order to secure repayment of the debt by the borrower. Conclusion. The first step to building wealth is to make sure you are in a position where your income enables you to save for the future. A good credit score can help with that, because it helps prove that you are a worthy candidate for borrowing money in the future. If you have an excellent credit score, it means that banks and companies who lend money will have confidence in your ability to pay back what they lend to you. That means if someone wants to lend you money for a mortgage, auto loan, or other type of loan, they are more likely to offer favorable lending terms or rates than they would if your credit score were lower. Achieving good credit is not an easy feat, but it can be done with discipline and patience. So there you have it. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.